Good evening, all. Ira Epstein of Linn and Associates with your metal market wrap-up, and this is for Monday, July 26, 2021. Hope you were looking for me. I took off a week, enjoyed it, was in beautiful Montana. It was not as hot as Chicago. You know, I've had friends calling, they're telling me how hot it was there. I was there for the week. Chicago's been pretty darn nasty. Now, we're still at an interesting point in time. Before I left, we were looking at markets that had come down rather hard. Markets were worried about what was going to go on with the Fed doing tapering and so on. And that is something we're going to hear about this week as the FOMC meeting, the two-day meeting, begins tomorrow, ends on Wednesday, and we will get out of that what the announcement is and, of course, what Fed Chair Powell says. I already did a piece for Bloomberg, and I am of the opinion the Fed will talk about tapering, but that's where I think it's going to end. The COVID situation is simply too rough. The Fed, I don't think, dare make a move right now. There's nothing wrong with planning for the eventual move, but I think that's why you've seen interest rates, while I was going in the under 1.3 in the 10-year note. Now, if we took a look at the gold market on a weekly chart of just closing prices, and I want to take off this week, the market finished out on Friday at 1801.80, which is under the 18-week average of closes, and you're still under it at this point. You haven't, though, had a period on just closes where you've taken out on the breaks a prior low from a week of closes. In other words, it looks every Friday for that close to see where it's going to be. And we're still holding above the last key here. And prior to that, you can even now take a look at this low, and I would say that that's your next important one, which is 1767.90. The whole difference is 20 cents from that break low. So I'm going to call the bias of the market, because you're underneath the 18-week on a weekly area charts down. Neutrality is the 1809 level, that 18-week average of closes. When we take a look at the action on the gold chart, well, you can see it's trying to march its way a little bit to the downside. And on the swing lines, you have a pattern of lower highs, lower lows. Now, that is the definition of a downtrend. The battleground is right now going to be the 100-day average in green of closes, the 18, and the market stuck between the two. On the way up, as the market rallied, it ran into resistance right here at that upper Bollinger Band. There's your 200-day average, and you can see that right here. And when I put the Bollinger Bands on, that's where you're at. Now, the importance of Bollinger Bands is so simple. The markets will stay within them 95% of the time. Go back, do your work, go on to Infopedia. It will explain how this algorithm works. So I have a course that teaches how you play with that. But the resistance I was looking for was back here well before I left. And while I was gone for those 5 days, the market's fallen back into that support line. So the theory worked out once again. In terms of momentum, you're getting oversold. Now, I define via the slow stochastics oversold is any reading that is under either the K line, which is red, or the D, under 30. Now, the difference between those two numbers is one uses a 3-period of time. In other words, a daily chart, 3 days, the other a 5-period, 5 days. And the red's always going to whip around the blue back and forth. When you're under 30, the market's oversold. So I have a downtrend that is in a support area and is oversold at this point in time. In the gold-silver ratio, whenever prices are over this red line, which is the 18-day moving average of closes, it typically means that silver's losing ground to gold. Why? The higher you have to go on these numbers means in a perfect world, you fill up your shopping cart of silver, you go to your friendly store that won't charge you a commission or a markup of any type, and he's going to take right now 71.2 ounces of silver to get 1 ounce of gold. And because the price is over that number, I say the bias is up, which means until things change, silver's losing to gold, and you can pretty well see that on the charts too. You are in a downtrend. Unlike the gold, you're not fighting these 100-day, the 200, or the 100. They're above the market for resistance. But similar to gold, you're in an oversold area, which I think keeps the pros at bay. Oversold areas, in my opinion, don't attract new selling. Embedded areas do, and that's when you convert from being oversold to locking in a trend by putting both of these numbers for several days or more under a reading of 20, and they stay there. In the copper market, boy, did copper come alive. Now, if you take a look at this, the market was going sideways, and this was on Thursday, the 22nd. You took off on Friday, the 23rd. First move over the upper Bollinger Band. The next day, you closed at the top part of that range. Now, if we go to this day, and you look at the range, 446.05 to 433.35, 440 is where the market finished. Well, if you look at that, you're in the top part of the range. You're not in the top quadrant, but you are in the top part of the range, over 50%. You certainly did that here, and now this is where you're at. Is it a breakout to the upside? It is. So I view this sideways action is over, done, finished. On breaks, I look for support. What else am I going to look for? I'm going to look for this 18-day average to try to cross over the green, the 100-day average, and put the market back on track to be even more bullish. So copper is saying to us something that, be it the copper supplies, be it demand for copper, goods, that even with all the bad news we're hearing about Delta, the Delta variant of COVID-19, this market is broken out, and until, by the way, until you would take out this low of 416.65, it is a vertical price rise of, if you look at it, what is that, 44 cents? It's just straight up from that low. I mean, pretty hard to catch a move like that, but it certainly did take off. The platinum is in a bearish campaign. It's got lower highs, lower lows. Support was hit. The lower Bollinger Band. Again, first time you hit a Bollinger Band, upside or downside, is where I think the pros take money off, a big amount of it. Then they'll try to figure if they should come back in. Could they give up these parts of it? Sure. But that's not what trading's about. Trading's about coming out more times than not where the market's going to hold. You're interested in the fillet. You're not interested in the side cuts of the meat. In the palladium market, you've got a pattern where you're coming into the resistance of the 100-day average and the 18. What is the trend? Well, I'm going to call it down. Lower highs, lower lows. The bias is down since you're under the 18-day average. And the market, well, the pattern is not oversold. To negate this downtrend, you'd have to take out the high right here of today, which was 2732.50. Actually, that's right here. Let me take it to you. That's Friday's high. They didn't open this market yet. That would be the high. But then all I'm looking for is the 18-day average. So I'm not seeing a lot of upside in this market. In the dollar index, hasn't opened yet tonight, but the market is failing right where I teach against that 18-day average in a market that never did change out of being overbought. And where did it pull back to? The line in the sand, the neutral zone on a chart, as I teach charting in my course, is the 18-day average. That's so often where a market goes to try to pull back and say, okay, what do I do next? In Ethereum, everything got a boost today as Amazon ran an ad apparently over the weekend looking for a crypto specialist. Why they asked for that, I don't know, whatever they did, but that got the market crazed in the head. You went up. What do you do the first time you hit a Bollinger Band, downside or upside? That's where the pros come out, and you tell me that they didn't. I think they did. I teach this and a lot more and talk about it in my morning futures video. This is in addition to my courses. People that take my courses, the reason they take the videos in part, I instill what I teach there. So you don't learn something and I don't keep bringing it up. I believe in repetition. I believe that the way to learn is you keep looking at the same thing over and over till you get it and you go, it's second nature to you. Now, during the week, Monday through Friday, I put out updates that cover 40 some odd futures charts on a daily basis. Sometimes I'll look at a weekly chart, and on Saturdays, I do all weekly charts. I was on vacation, so I didn't do the weekly this week, but I certainly covered the dailies. I'll cover the market news. I start off with that, what's going on in Asia, Europe, and so on. I'll cover all these segments of the market. Let's assume that you're a trader that just wants to go to energies. Well, on our website, when you go there, first you'll get a notice from me that the video is posted. You can watch it in your mobile app, whatever you want. But if you go to the website, there'll be a poll here. And as you pull the scroll bar, it lights up in bright, and I mean big numbers in yellow, telling you, hey, grains, meats, softs, wherever you're at, just let go and you're right there. The idea, save you time, because each video is over 20 minutes long. So I really cover a lot of ground. I cover all the charts. Why? Well, here's my thought process. I'm a pro at charting. I believe I am. I've done this 51 years, taught, had many courses on it over all these years, and whatever you define a pro as. I make my living doing this, so maybe that's what a pro is. And I know that time is an enemy to everybody. On the other hand, I love to teach. My goal is you wake up, you say, I wonder what Ira thinks about this market. I've been looking, I see gold's on the move up or down, or the stock indices. What's he saying? You come in, you see what I'm saying, where to buy, where to sell. It's not like these videos here, believe me. It's got a lot more meat in the morning, and I am very aggressive in the markets with my ideas on the trade. So if you'd like to learn that, simply go to iraepstein.com under the word research. You sign up right there, away you go, or you can call my staff and they can work with you. We have 30-day subscriptions, no contracts. You can buy a 1 year for even better pricing. I'm Ira Epstein. You have a great day.